Hey, this is Matt from InvestaQuant. Today is Friday, December 20th, 2019, and today is Options Expiration Day. So let's take a look at the Options Expiration bias. First thing I'm going to do is I am going to select the instrument. We've got ES selected here. The setup I'm going to look at this morning is the intraday open, so that is an entry at 9:30 a.m. Eastern Time. And the trade type, I'm just going to go ahead and select short here because I know that's where the bias is best at. So I'm going to start with that. My exit, I'm going to leave, let's do end of day to begin with. We can adjust that later. Opening filters, I'm not going to use an opening filter because we are opening, well, at the time of this recording, we are trading right at yesterday's closing price. So there's not a discernible gap at this moment. So I'm just going to skip over that and I'm going to go straight to market events so I can add that today is Options Expiration Day. I'm going to scroll down here from our list of market events and hit equals next to Options Expiration Day, and I'm going to hit View Results so we can see the results of shorting the open on Options Expiration Day, exiting at the close of regular trading hours. So that's 4:15 p.m. Eastern Time. And results here, we've got 202 samples. About 52% of those would be closing below the open since this is set up as a short trade. Profit factor pretty strong there. Average trade, not bad. Equity curve pointing mostly higher, a little bit flat here in recent years, but the general bias has been to the short side on Options Expiration Day, looking back to about 2003. So what I want to do to this is put this in a little bit more relevant context to what we have this morning. I'm going to do that by adding a price pattern. The price pattern I'm going to use is, I'm going to use day after a 20-day high close. I could go a little bit higher. I could do this 50-day high close, but I do want to keep a little bit more samples in here. Yesterday did close at an all-time high, but because our overall sample size is around 200, I don't want to cut that down too much by going too big on that pattern. And then I'm also going to add an indicator, just making sure it's above the 200. So that 20-day high close is happening in a more bullish environment. I'll run the results again, and that cuts our sample size down to 53. In doing so, the win rate has gone up from the overall sample size, which was about 51%. Now it's up to 58% for shorting at the open. Profit factor, average trade both got better. Equity curve still pointing higher, not flat here in the recent years like the others, or like the other one was that we looked at. Now the next thing I want to do is just show stop and target on this as well, in case you prefer to trade smaller stop, smaller target. We're going to use 50% of the 5-day ATR. That's about 8.5 points today on December 20th. So when you do that, you can see the equity curve gets quite a bit smoother. Win rate goes up even higher. We're now looking at 64% of these winning historically when shorting at the open. So bias here favoring the short side after strength in the market being defined as a 20-day high close above 200. So hope you enjoyed it. We'll do this again sometime soon. Come back and we will see you then.